The market is absolutely confusing, I have to admit. Gold is up, oil is up, and the US dollar is down. Bonds are holding steady, and we need to make sense of it all. And we want to learn how we can invest during these difficult times as well. What should we be doing? Should we be selling? Should we be buying? Should we be adding to positions? We'll have to find out. And I've invited back Rick Rule, legendary investor. He's been a frequent guest on this channel. I don't think he needs any further introduction, but he's also the host of the Rule Symposium down in Boca Raton, which we'll be attending, and I'm really, really looking forward to. And of course, he's also the brain behind Rule Investment Media, puts on fantastic conferences, mini workshops, and other things that will help you just become a better investor. Yeah, really looking forward to the conversation. We have lots to discuss. I want to start maybe perhaps with a bit of a recap as well, Rick. We spoke in January. We spoke at the Vancouver Resource Investment Conference, and you had some interesting insights to share. One of which really riled the market, like meaning it riled it up. And I'm sure you've gotten a ton of emails about it, and we've talked about it at the conference. But you sold about 75-80% of your physical silver position, not silver. You didn't dismiss silver, just your physical part. The question is, of course, now that I have you back, was that the right decision?
For me, it was, and I think it's important to differentiate that. All investment considerations need to be personal. For me, silver was in the speculative part of my portfolio. I save in gold. I maintain liquidity in U.S. dollars, and I decided to speculate in silver. I speculated in silver during a period of time when the metal was hated. It was below $20 an ounce. All of the internet comment that you saw about it was negative. And I figured that all silver had to do to advance in price was to become less hated. It didn't need to be loved. I also figured that with the level of vituperative hate that I saw, that anybody who wanted to sell had already sold, and that any type of buying at all would break the back of the few remaining sellers. Well, that turned out to be true. When it happened, when silver crested through 50, it was very clear it was no longer hated. So I began to get an itchy trigger finger. When I saw the parabolic up move in silver, and you'll recall in mid-January, there was a parabolic up move. That's what prompted me to pull a trigger. Those parabolic moves, what the Canadians call hockey stick charts, are almost always good times to sell. The backside of that hockey stick is just as steep, but it's a lot less fun for the longs. And so that's what happened. Specifically, I looked at my silver in the context of my speculative portfolio, and I did a little simple arithmetic. If I first of all noticed that the silver stocks relative to the silver price itself were undervalued. The silver stocks were valued as though silver was trading at $45 an ounce, when silver was in fact trading at more like $85 an ounce. So it occurred to me, if the silver price went up, the silver stocks would go up too. If the physical silver traded sideways, by definition, I wouldn't make any silver. And paradoxically, if silver traded down, the discounted price on the silver equity price assumption meant that I had better protection to the downside in the silver equities than I had in silver. So of the money that I received for selling my physical silver, 50% of that went to silver stocks. 25% of it went, in an error of great timing, to oil stocks. And 25 went to physical gold, which is to say, into my savings account. For me, given the way I organized my speculative portfolio, it was and is a great trade. Notice, Kai, in fairness, that if a financial planner looked at my own accounts, he would tell me that I was crazy to own either physical gold or physical silver. I'm the largest shareholder in Sprott Inc., which is in effect a financial brand name for gold and silver. To the extent that gold does well or silver does well, Sprott will do well. I own them. In the case of gold, because I save in gold. It is to me the ultimate liquidity and the ultimate portfolio insurance. And from time to time, I buy silver when silver is hated. But clearly, it's no longer hated.
We can discuss that because right now silver's trading around, I think, where you exited, around $75, if I'm not mistaken. So your timing was fantastic. Silver is a nice roller coaster ride. But you said you shifted into silver equities, and that worked out well for about 5 weeks, I would assume. But what did you do since then? Did you sell following that period?
No, I don't trade much, Kai. There was a time in my early 20s when I had the time and the lack of money, and trading made sense for me. But I take a very long-term perspective on things. I'm also not interested in small moves. I'm interested in much larger moves. I'm holding my silver equities because I think that we're going to be in a primary bull market in natural resources for as long as a decade, but certainly for 5 years. I think that the gold price will go higher. I think that the silver price will go higher too. And I think as a consequence of that, that the silver equities will go materially higher. Maybe not in the near term, maybe not for 6 months, maybe not for 12 months, but that doesn't matter to me. Kai, you and I have talked on your show before about the fact that, ironically, as I get older and I have less time on Earth, I've become much more patient. It isn't because I wouldn't like to be paid in a week or in a month. It's because I've learned in 50 years of investing that if I think in 5 year time frames, I make money. And if I don't, sometimes I don't. So I think in very long terms, the move in a stock from, a buck to a buck 20 is of no interest to me. I'm in the game taking the risk that you take in small mining stocks because I want the move from a buck to $10. That move doesn't happen quickly, and the move from $1 to $1.20 is of no interest to me. Similarly, the perturbations in the silver price have no interest to me at all. The fact that silver went from 18 to $75, that was of considerable interest to me. But remember, it took 4 or 4.5 years.
Absolutely. Maybe just to follow up on something you said, because I remember you telling me some names that you've shifted your money into. And you just mentioned smaller silver explorers, and I don't recall any smaller silver explorers that you've mentioned to me in January. So maybe just to refresh my memory, Rick, where did you put your money?
Well, I was in two of them. One turned out to be a horrible mistake. I was in Vizsla Silver, which, of course, suffered that tragic kidnapping and range of murders in Sinaloa, something that I couldn't foresee. The other was Abra Silver, which has and continues to treat me well. But most of the money went into bigger silver names. One of them, a silver name in drag, Wheaton Precious Metals, which is only about 45% silver, but still has a very strong silver component, a very strong silver constituency. Pan American Silver, which has lagged, but a stock I still like. And a couple of what I would describe as politically challenged silver producers, Peñoles and Buenaventura. I also subscribed in a rather major way to a private placement using some of the money and some money from elsewhere in what is now called Lumina Metals, which is Ross Beattie's latest pre-public entry. It is both a copper stock and a silver stock, having the exploration continuation of the famous Cooper-Schaefer district in Poland, and of course, fronted by my longtime friend, Ross Beattie. That deposit at present, in terms of indicated and inferred, controls over 1 billion ounces of silver in a wonderful copper wrapper.
Wow. Wow, I didn't know it was that much. I knew he was really excited about Lumina Metals. Do we have an IPO date or a listing date yet?
Apparently, it's proceeding to IPO now. The market is treating that very kindly, given the size and the grade of the deposit, overlooking the fact that there are some challenges with regards to mining law and mining tax in Poland. But, the Kuyper-Schaefer has been an important copper silver producer since the 1700s. And Ross was the first guy to look for the deep extensions of that deposit and found them in spades.
Yeah, it's about 1,200 meters deep, I believe. So it's
Yes.
that's one of the challenges. But let's just hope Poland doesn't expropriate. They got a
Correct.
history of that. So, Absolutely. But just coming back to silver real quick before we, continue in the conversation, because would you buy back physical silver at any point in time? What do you need to see? Hate is a strong word, but what does that look like again in this current environment?
Hate is what would be required. When I bought silver, it was after that first sort of retail silver squeeze, and the silver apes had failed. And the internet comment on silver was literally 10 or 20 to 1 negative. People who had had silver as part of their internet moniker were ruining the fact that they had ever learned to spell silver. I don't see that level of hate returning for quite some time. So I think it's unlikely that I would buy physical silver. And I continue to believe that the higher quality silver stocks are selling at a substantial discount to their net present value at today's silver price, that they're discounting 40 or 50% price declines in the metal. My life is all about hate or love, buy hate, sell love, and it's all about arithmetic. I'm not a momentum guy. I'm not a trading guy. I'm all about the gap between enterprise value, which is to say the market capitalization plus debt, and net present value. And that juxtaposition, that delta, is much more solidly on the side of silver stocks than it is in silver itself.
Maybe just to follow up, it seems like an obvious question and maybe a very obvious answer, but it's not about price. Because if I were to come to you, but Rick, silver's going to $300 in a year and a half, like at $75 sounds like a bargain. It's not a function of price for you per se. Just to clarify.
Well, how do you know? People give me all kinds of price projections all the time. I probably get called from 5 investment bankers or investment salesmen a day. And they tell me that I should buy, amalgamated moose pasture or consolidated orangutan or something like that because it's selling for $1 today. It's going to be selling for $3 tomorrow. How do they know? If they would instead tell me it's selling for $1 today, but it's worth $3 a day for the following reasons, I might listen. But price projections are really, I'm not sure if they're more boring or more insulting. But that's a bad combination.
Yeah, I can't stand people that base their investment thesis on future prices, not current prices. I struggle with that personally, right? Let's zoom in on or hone in on the buy, hate, sell, love, right? Thesis, because I need to ask you, Rick. Like I'd get crucified if I don't. But where do you see hate right now? Where do you see love?
Well, hate is something that's missing in the market. The first 2 or 3 years that you and I conducted these fun discussions, there was always something that was hated. There was always something that was out of favor. If you go far enough back in our discussion, Kai, the gold stocks and even gold itself was out of favor. Uranium was decidedly out of favor. I guess you could still say that sulfide nickel is out of favor. There are some regional places that are out of favor. Right now, the Middle East is decidedly out of favor. And so I'm beginning to look at speculating in Turkey again. I have written some checks for Saudi Arabian exploration. Certainly, there are regions that are out of favor. So I'm attracted to that sort of hate. I'm attracted to political risk in the same way that I am to out of favor commodities. But the truth is, in the sectors that you and I focus on, which is commodities-centric stocks, there's a real shortage of hate out there.